Hello, everyone. This is Dino. So I'm going to do another chapter in CABE 1 today, Other Habitational Insurance. So a number of things we're going to talk about: mobile homes, tenants, condo, seasonal home, builder's risk, and endorsements. If you haven't subscribed, please, I know it has to come from your heart. And if you've been watching the Rebo or this videos, if you subscribe, then it'll reach more people. Okay, thank you so much. All right, so mobile home coverage. 4 major causes of loss to a mobile home: fire, windstorm, hail, and transportation. Transportation could be it's being towed. Mobile homes, they take it to trailer parks, they park it there, and then if they're going to be there for a few months, they're going to what they call skirt it and tie it down and everything. So it's moving. It's not like a home moving from place to place. And so there are 5 main differences between a mobile home policy and a conventional homeowners policy. Once you settle in a place, let's say a trailer park, and then you can actually make it look like a real home, skirt it and tie it and everything. Then you can just compare that with the conventional homeowners policy, because it is a home. When it's not moving, it's, you don't want to call it as a mobile home, and it's just fixed in a place, right, for several months. So what are the big 5 differences? Coverage A in the homeowners policy is like the main dwelling building. Same thing here, mobile home building. Description of dwelling is amended here for the mobile home to include appliances, furniture, and equipment forming a permanent part of the building. Why do we say that? Because it's a mobile home. Once you walk into an RV like a mobile home, you will see most of the things are fixed, because when it moves, so things will not just fall apart and break. Appliances, furniture, and equipment, everything kind of fixed, okay, attached to the mobile home inside, because it's moving. It becomes a permanent part of the building. And also you have permanently attached carports and garages. Again, it's moving. So whatever you have there, you need to just attach everything permanently and make it like one unit. And then when they park the thing and then they skirt it, now what they're going to do is just use the tie down equipment, and then awnings. It's for shade. So you can see in the picture here, there's they just pull down the awnings, so it gives a shade during the summertime. And skirting means just the bottom of the mobile home, they will cover it up, and it won't look like a mobile. The wheels and everything, they'll cover that. So it's called skirting. And they will build some porches, so it looked like a real home. Okay, so that's what one of the differences between the typical home, like a conventional home, and a mobile home. Most of the things are attached. Then something else is very unique to mobile home is the emergency removal expense included. Because hurricane and things like that in a mobile home park, you're being asked to evacuate very quickly. In the event there is a threat of loss to the home from an insured peril, like a windstorm is a good example, or a forest fire could be another example. Up to 5% of the amount of insurance on the dwelling can be used to pay for reasonable expenses for moving. Okay. Expenses incurred in disconnecting water and power services, because once you park it there, you skirt it and you tie it down with the tie-in equipment. Then you have to fix the utilities, connect to the utility services, water, and all those things, power services. And so to disconnect all of them in a rush, in a hurry, like an emergency removal expense, so it could cost money, right? So towing and transporting cost, because you're trying to escape the the wrath of the forest fire, or maybe a windstorm or a hurricane. So C is contents, personal property. It's very similar to, in the, it's not a difference. Everything inside the mobile home is personal property, okay? Normally defined as personal property. I don't think there's any difference between personal property inside a mobile home and a real home and a conventional home. So what are some of the exclusions on a mobile home? The first one is the loss or damage caused by moving, because the mobile home, you have to tow it from place to place, right? So they exclude this because it's more susceptible to be damaged. Considered to be in the process of moving when the leveling jacks or blocks have been removed from the mobile home or all utilities are disconnected. So once you remove the skirting, the tighten equipment have been removed, and this leveling jacks and blocks have been removed, that means now it's about to move, okay, to another place. And the second exclusion, that the loss due to conversion. What's conversion? So somebody borrowed your mobile home and somehow they fake the documents and it's kind of converting the ownership to their name, okay? Embezzlement, okay, this word you have heard before, okay? This is just like one of the big frauds to take over the mobile home. Or secretion, the same thing, okay? So somebody is trying to create a fraud to take over the mobile home and put it in their name by anyone in possession of the building. Building means the mobile home, okay? Someone who has the possession, maybe somebody who borrowed it from you, and then now they're trying to change the ownership to their own name. So if something went wrong with the mobile home, like if some peril affected, fire, windstorm, or whatever it is, how do they settle the claim? Actual cash value. Okay, basis of settlement is actual cash value. That means how much is it worth, the mobile home, after the depreciation? Mobile homes and detached private structures are based on actual cash value, but personal property is based on replacement cost unless otherwise stated. So like the customer wants just the cheapest policy and he says, no, I don't want replacement cost. If you guys can make it to just the cheapest coverage, actual cash value in this example, I'm not looking for any, I don't want to pay too much money. So unless it's stated it's actual cash value, normally it's replacement cost. That means they replace it with like, kind, and quality, and the no depreciation will be considered. That's the meaning difference between actual cash value, where the depreciation will be considered. How much the stuff is worth today after the depreciation. But replacement, how much it's going to cost to replace it with the like, kind, and quality without depreciation, okay? All right, moving on to tenants policy. Very straightforward. We only cover the contents, the personal property of the tenant, and usually it will come with like a 1 million liability and as well as additional living expense. If something happened to your apartment and the insurance company will put you up in a hotel, they'll give you additional living expense. And so we're not covering the building. So list the coverage sections provided by a tenant package property policy. Coverage A, dwelling building, but it's insured by the building owner, the landlord. The tenant doesn't insure that. Coverage B, if there are any detached structure in the building, it's also insured by the building owner, not the tenant. Coverage C, of course, personal property like furniture, clothing, electronics, all of that, if the tenant's policy will insure it, the personal property, okay? And if this only happens in the commercial situation, that a tenant rented a space in a mall or something, and then they did some renovations, improvement and betterment made by or acquired at the expense of the tenant. So that'll be covered by the tenant's policy. So this is something that the broker has to know. It's not automatically covered. So the customer has to sit down with the broker and say, this is how much I spent. Just imagine so I don't want to get the commercial involved here, okay? Just keep it like a personal policy. Very rarely, people will make some renovation to their apartment when they are renting, okay? So this, maybe it's relevant in a commercial situation, but not necessarily in like a tenant. You're renting a basement, okay? So what improvement are you going to make there? Because one day you're going to leave, right? But if you did, so it says here that it'll be covered. Up to $500 for the following damages, excluding fire damage to the portion of the building occupied by the insured. So there is a $500 coverage for what? Damage resulting from theft or attempted theft. Somebody's trying to break into your, let's say you're living in a basement, you're renting. Someone is trying to break in. Okay, so there was a damage caused. So there's a $500 coverage. Also, damage caused to the interior of the building by vandalism or malicious acts. This is only the portion of the building that you are occupying, not the whole building. Okay, so if it happens somewhere else, I mean, you as a tenant, you don't care about that. Okay, but you're worried about something happened in the space that you have rented. And so coverage D, I just mentioned, is the additional living expense. It's 20% of the coverage C, personal property. So when somebody wants to set up a tenants policy, we're not going to ask them, okay, how big is your apartment and all of that. No. We'll start with the personal property. Okay, Mr. Customer, how much personal property do you think you have? Furniture, clothing, electronics, and all of that. Your bicycle, your guitar, all of that. So this tenant says, oh, probably about $50,000 all put together. Okay. So that's where the premium is going to be levied, will be on that personal property. Then it also has, it's not mentioned here, but it's usually it's a $1 million coverage for third-party liability and the additional living expense, which is, we talked about it in detail when we talked, I think, in previous lecture they gave on the homeowners habitational policy. We talked about it. Okay, just refer to that. The additional living expenses. If something happened to your apartment that you're living in, so the insurance company will put you up in a hotel, okay, and they will pick up the additional expenses, okay? The condo policy, it's very unique. The condo policy is kind of some kind of unique coverages. So what's a condo? It's a system of separate ownership, like units of individual units in a multiple unit building. So for the whole building, the condo corporation, they have to have their own insurance. And each individual unit owner, they have to purchase what they call unit insurance. Okay? And so let's just say there's some unique coverages here. Personal property amount is determined first. Let's assume it's 50,000. So when you insure a condo, somebody called you, one of your customers, they say, okay, I want to insure my condo. The first question you're going to ask is, Mr. Customer, when you look around inside your condo, how much do you think all the personal property that you have? Oh, what do you mean by personal property? Well, your clothing, electronics, furniture, all the things that are movable things, okay? And jewelry, any high value items, if you have a bicycle, guitar, and whatever it is, okay, your personal property, how much would that be? So let's say in this example, the customer says 50,000. Then there's another coverage called the unit additional protection. Why it says unit additional protection? What's the meaning of that? Okay, so let's say you just bought a condo. It's a brand new condo. It wasn't owned by anybody else. It's a brand new building, brand new condo, and you just got the key. So you open the door and you step in, brand new condo. Now, everything you see at this moment, the floor, the walls, the ceiling, the bathtub, all the electrical switches and outlets and the toilet and the kitchen countertop, the kitchen cabinets, all of that, if there's something happened to them, like a fire, whatever happened, the condo corporation must cover that. Remember this. This is called a standard unit bylaw. If you're a condo owner, you should ask your condo corporation to give you a copy of the standard unit bylaw. So in the standard unit bylaw, all these things are listed. What things are listed? The one I just mentioned. As soon as you step into a brand new condo, everything you see, I have to assume that it was not, you didn't make any improvement and betterment. You did the first day, you got the key, brand new. It was never owned by anybody before, brand new condo, you just stepped in. Everything you see in front of you has to be covered by the condo corporation. But then why we say unit additional protection? Why do we need that coverage then? You're asking me. Well, the thing is, the condo corporation, they never have enough insurance. They don't have enough, ever. I have a lot of adjuster friends, okay, in the company. And the one thing they will say is always processing the condo claims is the hardest thing for them. Why? Because they have to deal with the condo corporation. Because the condo corporation, they are supposed to cover, I just told you, all those new things that you just saw. As soon as you enter the condo, they have to cover it, but they don't have enough insurance. So the condo corporation, they are going through a crisis. In fact, Mr. Doug Ford, our premier, he has included in the budget, in the new budget, some major changes that are coming to the condo corporation. Okay, I think there are a couple of bylaws being worked on right now. And so the condo corporation, they cannot find insurance and they have very less insurance. So it's a chaos going on, okay? So in any case, what the industry did, they added this coverage. So let's say something happened in the condo, you had a fire, you're the condo unit owner. And so the condo corporation, they're supposed to fix it, but they have no insurance. I mean, they don't have enough insurance. So the unit owner will make a claim to us, okay? And then we will go and fix it. And we will see what were the original stuff. I'll give you an example. Let's say the original plywood cabinet in the kitchen. And then after you moved in, you spent like $10,000, $15,000 to make them into oak cabinet. You removed the plywood and you made the oak cabinet. So a fire destroyed the whole cabinet. So what the adjuster will do, your adjuster, you can make a claim, okay? So the adjuster will look at what was the worth, the value of the original cabinet, which is the plywood, and how much you spend extra. That's the last of the improvement and betterment. How much you spend extra to make them into oak cabinet. So your company will pay you the difference, okay, for the improvement and betterment. But then the original plywood cabinet, the adjuster will go after the condo corporation to get the money from them. And that's the hardest part, okay? But they have to get it. So you can see now how the unit additional protection works. And that's why the word additional is they use there, because it's not that unit protection, because we're not supposed to protect the unit. We are only supposed to protect the improvement and betterment. Anything that, you remove the kitchen countertop, the old, whatever the original one, and then you put like a granite and you spend $10,000 and something happened, it's destroyed now. So whatever extra you spend called improvement and betterment, it'll be paid by your company. And the condo corporation is to pay them for the rest, for the original. Oh, I have to put it in mute. Okay, hold on. Pause. Okay, so that's why they call unit additional protection. So probably, you understand now why they use the word additional. Okay, so that is 250% of the personal property coverage. So if you want to know, okay, how the condo corporation coverage works, what the amount, how they determine, you start with the personal property, all this stuff, okay? The customer in this example, which you're looking at here, is 50,000, okay? All right. And then unit additional protection at 250%. So in this example, it's 125,000, okay? That's the maximum the insurance company will pick up. The loss assessment is also 250% of the personal property, which again, 125,000. So what's a loss assessment? So when you live in a condo, there are a number of things which are called the common elements. Common elements. So for example, the elevator, the hallway, the swimming pool, gymnasium, if they have a gymnasium there, okay? All those things, all the unit owners, they may be using them, but they don't own them. They're owned by the condo corporation. But what if a tree fell into the pool during a windstorm? And now the people are not able to use the pool. So you can see how the ownership is by the condo corporation, but still it's being used by everybody. So what the condo corporation will do, let's go back to the tree fell on the swimming pool, okay? The example. So now they estimated the condo corporation is going to take about $70,000 to remove the tree, and the pool was just kind of broken on the one side. So, they got the contract and everything. So now they have to make a claim to their insurance company, because you won't make a claim with your company because you don't own the pool. Okay. So the condo corporation will make a claim, but then what they're going to do, they're going to come to each unit owner and they're going to kind of like ask for help. Hey guys, you can see that we cannot use the pool now and the kids are crying and everything, so we have to fix it. Yeah, we have to fix it, but we don't own the pool. Yeah, but you don't own the pool, but you guys use it. So can you help us out? So they're going to make an assessment. Let's say in my example, we need about $70,000, okay? And the condo corporation, they never have enough coverage, whatever it is. So they will come and ask, they'll make an assessment. Okay, so we need 70,000, and then we have 100 people here, okay? 100 units owners, whatever it is, divided by 100, and then they will make a assessment. Okay, each of you put, we need so much money from each of you to fix the problem in the pool. You see, that's how it works. So your policy, let's say you are the condo unit owner, it had that coverage. It has, okay? So you can just make a claim and the loss assessment will be picked up. So how much is the maximum coverage for that? 250% of the personal property coverage. So 50,000 times 250 is 125,000. And the final one we already discussed, improvement and betterment, will be equal to 100% of the personal property. So you may ask, okay, how much is the coverage I have for improvement and betterment? It's equal to your personal property amount, which is, in my example, 50,000. Okay, remember, these amounts you see here, they're examples. Now, this is how the condo coverages are calculated. To this day, this is how they do it. But most companies, they offer package. They put them together. Like CAA, they give you 600%. How do they come with the 600%? 250, 250, and 100. Okay, so I'm mathematically challenged, but I think I'm correct. 250 is 500 plus 100% is 600%. Okay, so what that means is when you have a blanket coverage like that, let's say CA is a good example. So let's say the loss assessment, it goes, in my example, it's 170,000, for example. All right, for the whole year. So even though in my example here, it's restricted to 125, but when you put them together, the improvement and loss assessment, the unit actually, you put it together, like make it to 600%, the customer can make a claim for any of these items within the big amount. So it won't be restricted, each coverage, it won't be restricted to 50, 125, 125, and 50. No, they'll put it together. Okay, so many companies offer that, like I think Economical offer that now, and Intact, they have a blanket limit. Okay, it's also known as the single limit. Okay. So what are the coverage components of a condominium unit owner's policy? We just discussed that. Personal property, the number one. Then unit improvement and betterment. Okay, it's also called the U1. And also materials and supplies. So let's say you went to Home Depot and you wanted to do some improvement inside your unit and you brought a lot of stuff and it's just lying there. Okay, and if it's stolen, as long as you can prove that you got them and then it's meant for some improvement and betterment, yeah, that you can make a claim for that. The loss assessment, we already talked about it, so you have a good idea about why. See here, there are some property that collectively owned, swimming pool, gym, hallways, elevators, and all of that. If something happened to them, like a loss, then the condo unit owner's policy, your policy, has some coverage. Now, why they come, I already gave you, the condo corporation, they come to you asking for money. I already gave you some idea, but here are some more examples. Inadequate amount of insurance. Oh, I'm so surprised. I just told you, okay, they never have enough coverage, okay? And then application of co-insurance penalty. So the co-insurance, if you listen to my other lectures, I talk about a lot, but just in a nutshell, let's say the condo corporation want to get coverage for the whole building. And they called a broker, and then they estimated they need about $100 million worth of coverage for the whole building. So the condo corporation says, no, that's too much. I'll only buy for 50 million. So the broker says, look, that's too less. You're going to buy for half of the coverage? How about 80%? And the condo corporation says, no, we will buy only for 50%. So then the broker says, okay, I don't want to lose your business, but guess what? When you make a claim, then we're going to look at how much we asked you to buy, at least 80%. In the example that I gave you is 80 million, but how much you purchased is only 50 million. Then we're going to look at how much you're claiming now, how much you want to claim. So let's say you're claiming for $50,000, you won't get the 50,000. You'll probably get like $35,000, $36,000. Is that okay with you? And the condo corporation says, okay, that's fine. I'll worry about when I make a claim. So that's the application of co-insurance penalty. So maybe they insured for very less, and then there's a big co-insurance penalty when they make a claim, and then they're going to make an assessment on everybody to make up for that. Cost of the loss is not an insured peril and are specifically excluded. Another reason they will come to everybody is that, let's say there was an earthquake, okay, and then the swimming pool is destroyed. So that is not included in their policy. Let's assume that, because earthquake is something usually excluded. Okay. So the cause of the loss, which earthquake is not an insured peril, is not included and specifically excluded. So now they cannot make a claim, and now they're coming to everybody to make a loss assessment. Okay, but then there's a problem with that. So here in the example, in the slide here, I use the pollution coverage. Okay, pollution, but I just said earthquake. It's the same thing, because the pollution is, I mean, it's an exclusion. It's not pollution is not same as earthquake, but I'm just saying they both are excluded. So the property policy, they usually exclude pollution coverage. Okay, you have to go and get separately. So let's say a pollution happened and they cannot make a claim, and then they'll come to each unit owner to get some money. Okay. Breach a policy condition by the condo corporation. So they did something that the insurance company is punishing them. Okay, they denied a claim because they breached a condition of the policy. No coverage when an assessment is made due to a large deductible. So let's say the condo corporation has a big deductible with their company. And now they're saying, hey, we have to make a claim, but we have to make a big amount as a deductible. Can you guys just pitch in something? And it says here, no coverage for that. And also the final point, coverage only provided when the assessment is due to a loss insured by the owner's policy. So remember, we went back to earthquake and pollution. The condo corporation can only come to the unit owner, which is your client, and ask for some help if your client's policy has earthquake coverage or pollution coverage in my example. What if they don't have? Because usually they're not included. They're excluded in all policies. Then we cannot do any, we cannot pitch in because our policy doesn't have it. You're not going to give the money from your pocket because you're going to make a claim for the loss assessment. I told you that before, okay? Your policy does cover it, but then they're making an assessment for a peril which is not even included in their policy, like earthquake or pollution, and it's not also included in your policy. Then why should we pay? Okay, they themselves don't have the coverage, the condo corporation, that coverage, and now they expect you to have it? No. And then unit additional protection, I already talked about it. Okay, so when there's a fire in your unit and the condo corporation is supposed to cover it, but they don't have enough insurance always, you can make a claim, okay? Now the cottage's seasonal residence, list the exclusions found in a seasonal residence form that are not excluded under basic homeowners form for perils and then for property. Because the seasonal home is different. They are in the middle of nowhere and it's not used year round. Okay, and then you have lots of people moving around in that area. Maybe it's a wooded area by the lake or by the river or something. In the wintertime, there's nobody living there. You can see the problem there, right? unlike a home which you live year round. So what coverages are not included for the seasonal home compared to a homeowner's? No coverage provided for the peril of transportation. Now, when you have transportation, don't think that we are covering some kind of transportation, but this is when the stuff that belongs to the seasonal home is being carried in a conveyance, okay? Transportation, something happened and the stuff is destroyed. We're talking about the stuff being carried, okay, by any kind of transportation. That stuff will be covered. I mean, sorry, that stuff, because why? That stuff is not going to be covered because it's a seasonal home. You know, you're probably carrying, moving stuff from back and forth, okay? So no coverage provided for the peril of transportation because you're not living there the year round, so you keep moving, right? The following coverage are provided only when indicated on the coverage summary page. Now, because it's a cottage, the burglary and robbery, vandalism, glass breaking, they can happen very easily because you're not there all the time. Probably you go there for a long weekend and then it's kind of abandoned, okay? So people can, even homeless people have lived there in seasonal homes and they've set fire to the home, they've opened the water faucet, they didn't close it. We adjusted so many claims for seasonal homes, right? All kinds of claims are coming through to us. And that's why the burglary and robbery, which is, it's going to be very common in a seasonal home, which is just so abandoned there most of the year, right? Except summer. The customer has to purchase this specifically. That's why I say the following coverages are provided only when indicated in the coverage summary page. That means the customer asks the broker, can you please add burglary or robbery coverage and vandalism, malicious act, and glass breakage? These are automatically covered. Okay, I don't want to say automatically, but for the most part, they're covered under the homeowner's policy. Okay, so but they're not covered under the seasonal home. When is a seasonal dwelling eligible for coverage under the basic homeowner's form? Like a basic homeowner's form, when a seasonal home can be considered? Principal residence must be insured with the same insurer. So the customer has his main home in the city insured with us, then yes, we can consider the seasonal home. Dwelling must be considered as a year-round residence and occupied at least one day in a 60-day period throughout the year. Remember I said a typical seasonal home, there's nobody there for in the winter time. Okay, so that's not acceptable. They won't get the basic homeowner's form. They'll only get the seasonal form, okay, which is like the actual cash value, the cheap one. But if someone occupies the seasonal home at least one day in every 60 days, then it's it's constructed as a year-round residence. Yeah. So we can give them the basic homeowner's form. And also, the dwelling is not rented to others. When you rent something to others, there's a lot of problem. Okay, I don't want to go into that, but if one of you own a revenue property and you rent it to others, it's so much problem. Especially now, the renters, they're refusing to leave, they're refusing to pay the rent, and they bring their own renters. I read this all the time in the newspapers now. Okay, all the time. The one guy bought a new house, and the previous owner was renting his basement to this guy. And he promised that, okay, before you move in, I'll have him leave. He already agreed to leave, but that was all a lie, I think. Okay. So the new owner, he was so excited, took his family and took the U-Haul. He packed everything from this previous home and he reached there, and the tenant there from the previous owner, he refused to leave. It's not that one, it's happening in many places now. He said, no, I don't even know you, he said. He told the police. So he called the police and he said, I don't know who this guy is. He said, he's the new owner. I don't even know who is this is the new owner. Looks like a fraud or something. So you can see that's why they won't give the basic homeowner's form if they is rented to others. Primary heating must be thermostatically controlled, furnace or electricity. Must be on year round. So if that's the case, then yeah, we'll consider the basic homeowner's form. Building must be accessible by maintained roadway year round. Okay, this should be year round road access. Many cottages, they don't have year round road access. Okay. Now the builder's risk coverage, this is either the customer is building a home from ground up, or they're doing some major renovation to their home and they're not living there. It's also known as the course of construction coverage. So it's a special coverage. It's not like the homeowner's coverage. So let's say the customer has a homeowner's coverage and he called you and then he said that, look, I'm going to be extending my house. We're going to make a new room or something. It's going to be a major renovation. During the renovation, we will not be staying. Our family will move out. Okay, we are going to a relative's home. And so we're going to give it to a contractor and they'll be working. So that's called builder's risk. It needs a special policy. Okay. So, you know, in the cave, they just make a small remark to the builder's risk. That's all it is. There's really nothing much there. And I was looking for some material there, but that's all it is. Okay. So for seasonal residents, list the underwriting guidelines found in a course of construction policy. Oh, I know what's happening here. My friend who typed this for me, he forgot to change this one. Sorry, give me 1 second, okay? This is what happens, you know, you work in too many things at the same time, but that's okay, we can do it. So how do they underwrite the builder's risk? List the underwriting guidelines. Coverage limited to single or two-family dwellings. Dwelling must be owner occupied upon completion of the construction. Coverage must be purchased not later than the completion of the foundation. If they're going to be constructing a new building, coverage should be purchased for the whole building when the foundation is completed, no later than the completion of the foundation. The amount of insurance purchased must be no less than the estimated completed value. What that means is when a customer calls and they say, oh, we're going to be doing a building, we're going to be constructing a building or major renovation. So the broker will ask, okay, Mr. Customer, how much you're estimating to spend to complete the construction? Oh, you know, the next 2 months I'll be spending like 100,000, and then after, no. We want to know the whole amount. From, you know, you have a plan, right? You're not going to do some renovation and then sit there and then think of, well, what else I can do. No. You have a plan. Okay, so tell me then how much you're planning your budget for the whole renovation until you finish the renovation and move back in with your family. Oh, we are just going to spend about $200,000. Okay, we'll take that amount and we're going to charge him premium on that. That's how it works. Okay. So amount of insurance, so go back to the amount of insurance purchase must be no less than the estimated completed value. And then coverage is limited to 1 year. That means if you start some construction, the company, they won't allow you to go beyond 1 year. You have to finish the construction within 1 year and move back and then occupy. You cannot rent it. It says here, dwelling must be owner occupied upon completion, okay? Now the rented dwelling, so list 3 exclusion normally found in rented dwelling policy. This is, you know, a customer has 2 homes, maybe a condo and a home. So he lives in a home and he has a condo for revenue purposes. And so he's renting the condo. So it's called rented dwelling, and you have to send a questionnaire and everything, okay? Rented dwelling questionnaire. And so there are exclusions: vandalism or malicious acts, sewer backup, and theft. So this one, you can talk to the broker and the customer has to purchase, like sewer backup. Why we automatically don't add? Because it's rented by somebody else. It's not our customer. Okay, we only insure a customer. So if they want this coverage, they can talk to the broker and they can add it. Your customer can add this to the policy. Now the endorsements, what's the purpose of endorsements? You can do a lot of different things. You can add coverage, you can increase the limit, you can even suspend the coverage, like, OPCF 16 in the automobile coverages, okay? And you can make a change to the policy, decrease the deductible, remove certain coverage. Let's say the sewer backup is costing you a lot of money, and then you can just call the broker and say, can you just remove the sewer backup coverage? I can't afford it, whatever it is, okay? I mean, don't do that. So it's a bad idea. It's sewer backup coverage is a very expensive coverage. You must have that on your policy. I'll just give you an example, okay? And you can increase the coverage and everything. So these are endorsements. So what the broker will do, they'll create a form designed by the CSIO, the Center for Studies of Insurance Operations, and just change form. That's all it is, a change request form, okay? So now there are some endorsements were specifically used for certain things. So before in this slide, we just said, okay, overall, what are the functions? Okay, to add coverage, to reduce, and all of those, right? To broaden coverage. So here we have some specific endorsement, like fine arts endorsements. So these are for high value items, fine arts items, okay? And also they are regarded as artwork, okay, fine arts. Paintings, pictures, and other work of art of rarity, historical value, or artistic merit. So there's something kind of unusual, very rare, expensive, right? Examples: value rugs, marble and bronzes, rare books, even manuscripts, and rare glass. So you can insure them. You have to get them appraised. You have to go to the proper appraising people in the town, and then you have to get them appraised, and then you add the tax on it, and then the insurance companies, they're willing to insure it for that value, the appraised value. So all risk burden to include, so they give you all risk. It also includes marring or scratching is usually an exclusion. I mean, these are expensive items. You should be handling them very carefully. Otherwise, you'll create scratches and everything, right? So you can actually include that coverage in all risk. And all sorts of smoke can be covered. Earthquake can be added. Theft by tenant, members of the tenant's household or employee of the tenant. You see, these are not automatically included, but you can have endorsement. That means you're paying a lot more. You're paying more. With the endorsement, you can enhance the coverage, you can add coverage, you can reduce coverage, you can do a lot of different things, okay? So flood, sewer backup, seepage, or other water. Yeah, so when you have all risk, then they include these coverages, which are usually excluded, okay? So Section A, coverage while on the insured premises are such as the location specified on the endorsement and while transported between such location. So the Section A say that when the fine arts items, which are very expensive, they are kept in the insured premises, okay, or other locations is specified on the endorsement. If not in the main home, where else it's going to be? We need to know. We need to know the location, the address of the place. Section B, coverage while away for prolonged period for purposes of exhibition, display, use, safekeeping, and restoration. So because these are rare items, customer, they want to take to an exhibition and show it to other people and everything, right? But there are some exclusions here. Breakage unless caused by perils named in this endorsement. If there's a breakage and it's due to a peril that is not listed on the endorsement, it's not going to be covered. I can't give you an example. I can't because I already said all risk. So I'm expecting that most of the things are covered. Damage caused by birds, vermin, and rodents and insects is not covered. You have to take care of those, okay, on your own. Insurance company is not going to look after birds, vermin, and rodents. Okay, you need to take care of them. Because if you don't take care of them, they're going to finish your fine art. They're going to eat it up. Damage caused when some work or process being performed on these properties. So for that, the person who is doing the work has to get a special coverage called it's not the finished work, completed operations coverage. Okay, because when you're doing some work on some item, something could go wrong. It could be destroyed. Why we have to cover that. Okay, so the person who's working on it, let's say you got a contractor and they're working on this, then the contractor has to have a policy called the completed operations coverage. Okay, so another endorsement you can buy is called the personal articles endorsement. This for items like cameras, projectors, and firearms, fur, jewelry, silverware, and things like that. Okay, so most of these items, they need appraisal. And so all this brought in to include loss or damage to sporting equipment due to its use. It's included there because you're paying a lot more. Chipping, marring, scratching is covered. Accidental loss or damage while these articles are being worked upon. So because you're buying the endorsement. Usually snowslide, earthquake, landslide, they're not covered. But when you buy the all risk, so it's broadened to include this, okay? Theft by a tenant, members of the tenant's household or employee of the tenant, flood, sewer backup, seepage, or other water. But for all these, you have to get the broadened coverage, like all risk coverage. Increased cost of demolition or construction for dwelling. So sometimes, you know, a loss happened and the house is half destroyed. But then there's a lot of things you have to remove before you can start rebuilding or constructing. So it pays additional costs which are required to comply with any law regulating demolition, repair, or construction of building after loss. Okay, it pays additional cost for that because the government may have some regulation. If your building is destroyed, how, under what conditions you can demolish the building. Okay, they're going to give you a lot of, the advice, so to speak, okay, how to do it. Insurer agrees to amend the base of claim payment to reflect the increased cost arising out of existing building bylaw, law, or ordinance. So sometimes when you rebuild a house, and there could be a new bylaw, it says that, hey, you have to have a wheelchair access now in this building. That's a new bylaw. Okay. So insurer, they agree to amend the basis of claim payment to reflect the increased cost arising out of an existing building bylaw. Okay, so the insurance company will help out. So how about the sprinkler bylaw? So let's say your building is destroyed and then now you're rebuilding it. Insurance company is rebuilding it. You made a claim. But then the new rule says in the city that all buildings there have to have a sprinkler system. It's a sprinkler bylaw. So the insurance company will pay for that. Okay. Demolition or construction extension, we already saw that. Insurer will agree that pay the minimum additional cost of demolition, construction, or repairs to comply with any regulating laws. Okay, coverage only available if insurer repairs or replace the damaged or destroyed building on the same premises with a building of the same occupancy constructed with the materials of similar quality. So what that means is, let's say the building is destroyed and then we are rebuilding it. It has to be in the same location. You cannot tell the insurance company, oh, I have a piece of land near the lake. Why don't you guys build it for me there? No, they won't do that. Okay, and the same occupancy means it's not only how many people live there, but what their building was used for, what they were doing before. It has to be for the same occupancy. Okay. And then the construction of the building has to conform to, similar material, or if not higher quality material. It cannot be lower. Okay, so these are the conditions. Finally, there are 6 additional miscellaneous endorsement forms. Okay, it's called residence glass endorsement because the glass coverage is pretty tricky. It's some of the building, they're so totally covered with glass, and it's very difficult to adjust the glass claim. So you can add an endorsement for that. Sewer backup we talked about is not automatically included. You have to buy it through an endorsement. Earthquake, we said the same thing. Vandalism or malicious act extension endorsement. So not all policies they have them. So you can have the endorsement to add them back. Watercraft. Okay, definitely you have to get a policy on its own for watercraft. It's not automatically included. So you can put it on an endorsement, or you can go and get a whole marine policy, depending on how big is your watercraft. Travel trailer floater, you can have an endorsement, or you can just insure the trailer separately. We deal with Aviva Elite. So Aviva Elite, they deal with all the summer stuff like trailers, RVs, motorhomes, ATVs, and snow, all of those things, right? You might as well go and get a separate policy for the travel trailer. Okay, my friends. So I know that's a lot, but I want to finish that in one lecture, and I will see you in my next lecture then. Thank you so much.